y después aparece el papel, digamos, como una cuestión de portabilidad.
I think there's a previous discussion about dollarization. Actually, strictly speaking,
Pro-Bitcoin president Javier Milei vowed to close Argentina's central bank. But will he do it? Or it is just the starting of evolution from a traditional banking system to a cryptocurrency-based system for financial services? Let's know everything. The challenge of replacing Argentina's peso with the United States dollar, and potentially Bitcoin, will be great, but it's not insurmountable. The image of a presidential candidate destroying a model of the central bank with a sledgehammer will not leave Argentines' memories for a long time. But once President-elect Javier Milei is seated on the throne on Decade 10, will he still have the courage to follow a winding and risky path? Argentina carries, with its 9 defaults, the title of world champion in the category of defaulting on risk. It is currently the International Monetary Fund's largest creditor, and with a credit risk assigned by Fitch Ratings as CCC, fourth from the bottom score. It needs to fundamentally change its economy. I'm no fortune teller, but I can offer some insight into the process. Let's start by recognizing that it is not impossible for a country to live without a central bank. Currently, there are 198 countries and 180 currencies. 10% of countries do not use their own currency. Another important reality is that the IMF does not have monetary in its name unintentionally. It likes central banks, and as Argentina's main creditor, its opinion will be very important in the process. We also have Argentina's monetary base. According to the county's latest balance sheet, that figure stands at $7.7 billion. That's 220,000 Bitcoin BTC tickers, down 37,784 for those keeping track, and just slightly more than MicroStrategy's $6.9 billion valuation. For comparison, the US monetary base is greater than $5 trillion. That figure suggests the challenge of replacing the monetary base will be great, but not insurmountable. One of the difficulties of exchanging currency is obtaining paper money for day-to-day activities, but we in the crypto world know that both stablecoins and Bitcoin can help a lot in this process. It would make sense if Milei uses the blueprint established by El Salvador. That would mean first adopting the US dollar, and subsequently beginning to accept Bitcoin. Argentina's monetary base. 2014-2023. A currency generally requires legal tender status, which means that all establishments in the country are required to accept it. Milei may institute a major policy change in this regard. If he is really a liberal, the classical term for libertarian, he may allow the market to decide which currencies succeed. It is well known that Argentines keep a large amount of savings in dollars outside of their country. The numbers are uncertain, but it could be in the range of 100 billion to 300 billion. But what is really important is that, under the new exchange rate rules of this new government, that money may feel comfortable returning to the country. Colin Rugg says on his tweet, "Meet Argentina's new president, Javier Milei. When he was growing up, kids called him the madman because of his energetic outbursts. At the age of 18, Milei, who was a soccer player, gave up the sport to pursue a career in economics. Milei started getting famous for debates on live television, where he would hurl insults at his rivals, along with his madman energy. After a 2018 incident where Milei called a journalist a donkey, a local court ordered a psychological exam after he refused to apologize for gender violence. Milei hates wokeism, hates socialism, hates the media, hates excessive government spending, hates the political elite, and loves his country. Argentina, even during the Menem period of the 1990s, did not have a fully convertible currency. So, the first thing the future government is likely to do is unify all exchange rates and decree the currency's free convertibility. If it doesn't do that, we should start to get worried. As a final observation, it's important to note that the central bank and the treasury are two completely different entities. It is possible for a country to work without a central bank, but it's more difficult not to have a treasury that controls inflows via taxes and outputs via public spending. Treasuries are also the issuers of government bonds. While a country can issue bonds in foreign, it does not control the currency printer. That increases the risk of not having the currency to pay for the bonds. That means a country's debt capacity decreases, forcing it to work with a much lower level of leverage and a revenue and expenditure policy compatible with that reality. Notably, that also forces a country to be extremely efficient with its fiscal policies. That outcome is most likely at the root of Milei's proposal.